Welcome to the 1st of July 2020. I am Bosin Omofaye. This is Frontier Opening Bell. Welcome my panelists to today's show, starting the second half of the year and the new month. Chima Ukadike is a consumer goods analyst at Betiba Capital. Good morning, Chima. Welcome to the program.
Good morning, Bosin. Thank you for having me.
Thank you so much. And of course, Uche Naminis, who is a managing partner and FX trader at Blue FX Nigeria. Good morning, Uche.
Morning, Bosin. Thank you for having me.
Thank you. Let's go East Coast with Ali Khan Sacho, who is the CEO and founder at Rich Frontiers Management. Thank you, Ali. Good morning.
Good to be with you, Bosin.
Quite a lot happening around in your backyard. We'll get to that in about a minute. But quickly give everyone an overview of where some of the African bourses finished up on the final trading day of June. That's the Nigerian market, down sharply 1.53%. A couple of earnings from 2019 and first quarter 2020 still coming through on the Nigerian Stock Exchange. The Ivorian market, the BRVM, was in the green, 0.43%. Egyptian market made the comeback for the first time in the last few sessions, 0.13%. A lot of stories around the Egyptian market as well. Meantime, Kenya was down 0.8%, a shy of 1%. South African JSE 0.4% on Tuesday, the second trading day of the week, but the final one for the month of June. So let's go to East African markets. Of course, the big stories around the unrest in Ethiopia with the arrest of one of the biggest, owners of one of the biggest media group there within the country. That's a story. About 10 people are reportedly dead already. Meantime, Kenya is reporting inflation easing to 4.9% in June. Economy reportedly went up in the first quarter of the year. Sticking with this largest economy within East Africa, the tax agency says is setting up a new tax force that will target digitally generated revenue. Nigeria is thinking about the same thing, targeting digital revenue in a bid to increase revenue for the government. Meantime, Kenya's Capital Market Authority has issued guidelines on share buyback for companies listed on the Nairobi Securities Exchange. Uganda's central bank on Tuesday cut interest rates to 7%. Inflation moved up to 4.1%. Meantime, Ethiopia, where Ali is going to start a conversation, is expected to grow its economy in 2020, beating South Africa, Angola, Nigeria, and Kenya. Take it from here, Ali.
So thank you, Bosin. Obviously, the Ethiopian story is the one that's caught everybody's attention. This was started off with the assassination of a very popular musician, a Oromo musician, and then a very, very swift spike up in unrest. I saw they've shut off the internet. I can't speak to anyone in Ethiopia at the moment, but I saw some photographs from Addis, people on the streets, Reuters reporting a number of deaths, a number of explosions. So this is no small thing. And of course, this is in Prime Minister Abiy, the Nobel Prize winner last year, the one country, I think, in Africa where the IMF said there was going to be positive GDP growth this year. And yesterday they were announcing the launching possibly of a stock market. So let me just put things in perspective. It's not looking good. On top of that, you've got this very adversarial situation with Egypt. The Egyptian commentators were jumping on board yesterday on social media saying, you know, the guy's not even in control of his country. You know, what kind of adversary are they going to be vis-a-vis Egypt? So my concerns are, you know, you've had these forces which have been trying to federalize and tear the country apart. Abiy's been trying to hold it all together, and this could be a sort of a tipping point moment for Abiy. I mean, it's very easy for this to escalate. More people die, more funerals, more intensity on the streets. So, you know, I think all those projections about positive GDP growth now depend on how the Nobel Prize winner deals with this scenario. It doesn't look very good to me, and I'm extremely concerned as to where it goes from here. I think we've got to watch carefully. It's a little bit like a hermit kingdom. They've locked down the internet. We don't know what's happening. But
a whole lot of economic reforms Ethiopia is trying to handle. Aside the stock exchange, Ali, we all know Ethiopia is also trying to deregulate its telecommunications sector, bringing in bidders even from Kenya.
Absolutely. I mean, Abiy, when he came into power, was aggressive about. He said, look, we can't afford the current economic model. This model was developed by Melesh, Prime Minister Melesh, who led the Ethiopian revolution from Tigray province in the north. And there's a big problem there as well between Addis and Tigray as well. But he said, look, we can't afford it. He restructured his loans with the Chinese. And he started saying he's going to privatize, he's going to open up telecom sector, not ready to open up the banking sector so far. And a lot of telecom companies were attracted, the 110 million people market. You have a big diaspora who would pile in as well. So I think all of those ideas are now on hold. And the question is, has he got a grip on the country? And if he hasn't, you know, you could even see the Egyptians taking advantage of the situation as well.
Interesting times, but very delicate times in Addis as we speak, because investors in the privatization and all of that, they have very robust commodities exchange as well in Addis. So it's not looking good at all for foreign direct investment, for all the efforts being done in the last couple of years in Ethiopia, and the forecast that at least is going to go positive reading on the GDP this year. But give us a minute quickly on your overview of the Kenyan market and the economy, Ali, in terms of what the PMA is trying to achieve, what the tax authority is trying to do with the digitally generated revenue, which Nigeria and FRS has also been talking about, government trying to widen the tax net, all in the bid to fix the problem of this pandemic.
So just going through your headlines, inflation soft, well-behaved, 4.59%. In June, a couple of spikes in food inflation, which we're going to see across the continent because of the supply chain issue. Economy grew 4.9% in Q1, surprised everybody. But bear in mind that data capture moment, we did not have the lockdown in that first quarter. So I think we'll see reasonable first quarter numbers. We didn't see that in South Africa, interestingly, but yeah, I think that's the fact that we only locked down very much later than that. Tax agency, look, they're popping quaaludes like many tax agencies across the continent. They're in a situation where they know they've got to, they're going to have a sharp drop in revenue, whether it's in Lagos, whether it's in Nairobi, whether it's in South Africa, and you can't keep squeezing the same lemon. If you've got to now account for the fact you're not going to be able to collect as much as you thought you would, and essentially, I think, you know, these guys are reaching for all kinds of options when the real problem is the cost of the government. And until we cut the recurrent expenditure and stop all these guys spending as if they're in the first world, I don't think we're going to get on top of this situation. So they're now going for digital-based revenue. You know, we've got a thriving digital sector here in Kenya because of the M-Pesa situation. And I'm not convinced that, you know, this is the right time to be lumping it with huge amounts of tax, especially as we're obviously all going to go into a recession. The CMA introduced new regulations about share buybacks. A lot of shareholders, particularly Chris Kirubi of Centum, we talked about Centum a few weeks ago, think their shares are very undervalued in the current environment and want to buy back those shares. So that's encouraging that. And then final point, just Uganda. Yeah,
just Ali, just a quick second. We'll take that in just a few minutes. Let me say a welcome to Ayode Jebo, who is a chartered stockbroker and CEO at Afinvest Securities. Ayode, good morning.
Morning, and thanks for having me.
Welcome to the party. Let's give everyone an overview of the Nigerian marketplace on Tuesday and a few stories around the the market. The number of earnings on the Nigerian market, but again, the market went down. The NSE went down 1.5% yesterday. BUA Cement was down 10%. Cadbury in the consumer goods space was down by the same margin. Of course, if you compare the market cap of both companies, they are miles and miles, light years apart. BUA Cement is about the third largest company on the Nigerian market. Cadbury is way, way below that. Meantime, there was a major workshop yesterday, virtually done. Nigeria's head of AFDB, Ebrima Far, among some of the other comments, says it's a clarion call for Nigeria to rethink its development model, say the extant policies and development plans are not been working, have been compounded at this time by coronavirus. Says it's a time for Nigeria to rethink the country's development plans. Meantime, yesterday, the NNPC, the State Oil Corporation, flagged up the construction phase of the gas pipeline that runs from Ajaokuta to Kano and Kaduna. In neighboring West Africa, the CDC group, working with the Societe Generale, says they're doing $100 million risk deal for Africa's state finance. The money will come through the Societe Generale for distribution within the French-speaking West Africa. So let me just start this with Chima Ukadike of Vetiva Capital. She's talking to us about the Nigerian market space. What's your story? What's making the big news for you on Nigeria's consumer marketplace?
Well, thank you, Watson. So we have seen the consumer goods segment of the Nigerian Stock Exchange decline. It's the worst performer year to date. Even for the second quarter of the year, it has declined around 25.49% year to date. This is not surprising to us, well, given that the consumer goods sector is one sector that is closely correlated with the performance of the broader economy. So we quite expected to see this performance, and given the fundamentals of the economy at this time with the coronavirus pandemic, the pressure on consumer spending and income, we expect this to still affect the consumer goods sector as we go forward. So for the Nigerian Stock Exchange, from Q1 we saw a bearish market. Up until April as well, we still saw a bearish market. But around May, I think we saw a bullish trend in the markets, mostly because we saw that most of the stocks, fundamentally sound stocks, had gotten to very low lows, and we saw investors come to bargain hunt on them. However, in June, that's last month, for the most of June, we saw a bearish market. We believe that investors decided to make gains on some of the stocks they had bought in the time where they could make gain. So we also saw we had thought that by yesterday, which was the end of the first half of the year, we'll see some portfolio rebalancing help to prop up the NSE ASI. But that didn't happen. We saw the NSE ASI dip by 1.53%. We expect this to continue going forward because, like we said, nothing has really changed fundamentally. We still expect the oil shock to remain, although we see oil at $40 per barrel, which is a huge plus for us, which is very good. We still expect the pandemic to affect many sectors of the economy, and we still expect this to affect the economy going forward.
Thank you so much, Chima. Let me ask Ayode Jiebo at Afrinvest, the CEO of Afrinvest Securities. What's your big take here on the Nigerian market? We finished up the first half of the year yesterday, and the market went down by 1.5%. That's quite an interesting scenario. It looks like a bit of a profit booking there, some of the big names.
Okay, yes. Interestingly, if we look at the first half of the year, the domination of domestic investors has been what has been looked very exciting. Our market has mostly been dominated by foreign investors. If you look at the NSE report as at May, the amount of domestic activity was as high as 70%, which is very impressive. So we believe that if that is sustained a bit, it would also help balance some of the shock that we see when foreign investors are trying to pull out. But beyond that, what we saw yesterday because the market had gained slightly before yesterday, but most times at the end of a quarter or end of the half year, we see significant portfolio restructuring, like Chimas highlighted, and that was the major factor that led to that. A major profit taking in Boa Cement, which is the largest, the third largest market cap in terms of stock on the Nigeria Stock Exchange. So, but by and large, we feel that investors now will be expecting to see like H1 2020 results, which would cap, or Q2, if we put the Q2 2020 results, that will capture the impact of COVID-19. So that's what would determine the trading activities that we'll see. We know results which we should see a quarter-on-quarter decline, and mostly also a year-on-year decline in terms of top line and bottom line. But we're hoping that it's not going to be very negative and depressing, such that it will affect market sentiment, and we may see a major sell-off in the market.
Well said, Ayode Jebo. Thanks for giving us some insight into the second half of the year. Today, we see the draft of manufacturing data, PMI, from developed economies, and also here on the continent. South Africa's ABSA manufacturing PMI came in early today, reading 20 against 50.2 in the previous period. That shows the South African economy is in the waters. Of course, we saw the South Africa's GDP yesterday, part of the big economic and market. So the GDP came in negative 2%, a bit lower than some of the forecasts, but still showing a contraction in Africa's most advanced economy. The market, the South African GSE, tried to sidestep those that negative data when it finished up yesterday. So that's the Southern African market. Quite a bit of other stories in there for South Africa. Yesterday we talked about the Naspers earnings. This morning it was Steinhoff saying that his numbers are worse than expected. Of course, we all know the problem with Steinhoff with this accounting numbers and all of that over the last 1 year or so. So that's the I'll give you a snapshot. In terms of broader economic data, the trade balance shifted from deficits to surplus, 15.94 billion rand. Investec announced the total voting right of about 696.08 million ordinary shares, and the rest of the stories in the derivatives market with the new gold. So let me ask Uchenna Minis from BlueFX. In terms of South Africa being what you can call the poster boy for advanced economies on the African continent, well correlated with a number of currencies and all that around the world. What are you reading into some of these stories for the Southern African economy and the markets?
As you've rightly mentioned, South Africa sort of serve as a poster boys for the emerging market, and at the same time, it has highly correlated to risk of sentiment, risk on sentiment from the developed market. So we have that market sentiment sort of trickling into the South African market. What we are starting to see and starting to observe in the developed market space is some level of risk on, as investors are trying to understand that there is so much liquidity that would always offset the risk that comes with COVID-19. And we are seeing that in commodity prices. We're also seeing that in risky assets. And I think that is what is also translating into the South African market. And it's not looking like any of these central bank or governmental agencies are looking to back down as regards to providing physical and monetary stimulus into the market. And the Federal Reserve is now the number 5 holder of junk bonds and corporate bonds in the US. And that in itself is telling you that they are not looking to back down on anything. They are not ashamed of anything. We are in the greatest debt to GDP ratio as it is right now. And we will continue to see things like that in terms of having that sort of bolstering effect and sort of providing that support for the markets. And the same thing that provides some level of confidence from market participants on a very general scale, and that's what we'll be seeing. I think that's what we're seeing in the South African market.
Interesting. Ali, weigh in on this for just 1 minute quickly in terms of the broad economic data coming out of South Africa. The GDP went down in the first quarter, 2%, but here was your trade surplus moving from deficit to surplus.
So two points. I know that a lot of market commentators were expecting a better performance in Q1. I didn't. I actually think shrinking 2% wasn't as bad as it could have been. Now, the interesting point about this trade balance shift is this is a phenomenon we're seeing not only in South Africa, we saw it in India, we're seeing it in a bunch of different countries, and it's a positive side effect of the situation that we're finding ourselves in. It's because imports are being slowed down dramatically in this current environment. So I think that is actually a net positive, and it'll be interesting to see whether we see this spillover into other African economies. And I think that's an element of support for African currencies, which have rebounded in many cases quite substantially in the last 4 to 6 weeks.
Interesting. So back to the Nigerian space, Ayodeji. The story yesterday, the workshop which the AFDB Nigeria had with government officials, part of what was said was that Nigeria needs to rethink its development model. That's what the head of the AFDB for Nigeria said, which was, of course, all over their Twitter handles and what have you. What do you make of this statement, really, in just few words?
Yes, I think in my own view, we are good at setting policies. The major phase we have problem with is implementation. A lot of very interesting policies, and something concerning about some of those policies too are also they are short term. Most development plan and program to be long term, and so that it outlive a certain government and they can also follow that roadmap. You can, if we look at a bit of what happened in Lagos State and how Lagos State has been able to develop a bit, was because there was a blueprint that each government that have come in have followed largely, and that has really helped in terms of infrastructure development. But what we typically have is you have short-term plans, and for you to have any meaningful investment and growth, you need long-term plan, you need long-term investors. But if you continue to get short-term investors, short-term plans, then for most times you would not see that expected impact that we're supposed to, tangible impact that's supposed to follow some of those interesting policies. For instance, you look at the current economic sustainability plan, yes, to take us out of recession. But I believe that we shouldn't also be more focused about coming out of this recession. We should also be focused on how can we avoid another recession. And that, I feel, should be the main focus, in my view.
Okay. Thank you. Chief, I'm going to ask you, if you look at the raft of PMIs, so what you call manufacturing data, the last from the central bank for the month of May showed that both manufacturing and non-manufacturing PMIs were underwater. We're yet to have the one for June, most likely will be out today. How much of this manufacturing economic downside do you think will flow into consumer goods as major components of our manufacturing activity report?
Thank you, Bassing. I think that a lot of it would flow because, like you rightly said, consumer goods sector makes a large chunk of the manufacturing sector. We've seen that the manufacturing data showed a large reduction in order levels and stock levels and inventory levels for managers, for purchasing managers. And this is not far-fetched. We know why that is. We've seen a crush to or a depression in consumer wallets and consumer spend because of the loss and possible increased loss in income. We expect this to still continue going forward, well, barring when we are able to get sustainable, maybe a vaccine or a cure for the pandemic, and we're able to resume economic activities fully, and people are able to maybe get back to a more stable source of income or more stable income levels. However, we know that since consumer spend is the lifeblood of the consumer wallets, and consumer spending is the lifeblood of the consumer goods sector, we see that we should still expect this to continue going forward, given that a lot has happened to the manufacturing sector. We see the restrictions to trade, to FX, and all that. We don't expect to see a positive occurrence anytime soon.
Anytime soon. Anytime soon. There's no vaccine. There is no drug yet for the virus. So it looks like we just got to learn to live with it. Keep dodging it at every point as we can, with the face masks, with washing hands, and whatever social distancing we'll be able to do. Let's just take about a minute with the North African markets before we wrap up the show, and just ask Ali and Uchenna to win very quickly. So the Egyptian Stock Exchange says it's suspending trading in Nicety Investments and South Valley Cement. Egyptian Real Estate Group, which is a listed company, says it's paying a dividend of 0.5 Egyptian pound as per share. So the rest is just there. You just catch up the rest if you watch the show on our podcast later. So let me just ask Ali for his 30-second take on the Egyptian market. Today and tomorrow the stock markets, the stock exchange in Cairo is closed until the 3rd.
So I think in Egypt, for me, the key barometer is the currency. And I think as long as that currency is behaving, and it is, it's 16.14, and I think I'm fairly comfortable about what Egypt is doing. As I've said before, I think the Egyptians understand their investor base, both domestic and international, far better than any other African economy. And their ability to speak to that investor base is a multiple of whatever anybody else is doing. And I think as an investor, that makes a huge amount of difference in terms of risk and in terms of how you move forward. Let me touch briefly on Sudan, if I may. Sudan, of course, had the revolution last year, the ousting of Bashir, that amazing outpouring of people we saw on the streets in Khartoum. Unfortunately, so far, people have not backed up that revolution with cash. In the last week or two, I've seen a noticeable stepping up of commitments, and I sincerely hope that Adesina at the African Development Bank, that Malpass at the World Bank, and Ms. Georgieva at the IMF step up and put money to work, because this was truly a glorious African democratic revolution, and it needs support. It can't go down in a horrible situation of debt and what have you.
Thank you, everyone. Thank you, Ali. Let's leave it there for today. Let's get back together tomorrow to continue the conversation from here. Ali Khan Sachu in Nairobi, thank you very much. At Frontier Management Limited, Ayode Jebo from Afrinvest Securities. Uchenna Minis, thank you so much, from Blue FX Nigeria. We'll touch more on African currencies tomorrow. Quite a whole lot of work to do there with the route of data we're getting. Then of Chima Ukadike, who is the consumer goods analyst at Vertiva Capital Management. Thank you, everyone. Enjoy your day. Welcome to July, and I'll see you again tomorrow.